Welcome to the 3 Degrees of Freedom podcast, where we explore lifestyle engineering with our expert guests to bring you in alignment with your own 3 degrees of freedom, location, time, and financial independence. Today on the show, we've got Mr. Jason Brown, a seasoned trader and educator who has redefined the game of investing. With over a decade of trading experience, Jason's journey from a Sprint PCS cell phone rep to a trading maven is a testament to the transformative power of understanding the financial world. And at just 23 years old, he turned a $10,000 student loan into a six-figure trading account in under a year using his unique power trading method. And it's all about demystifying the complexity of the stock market and options trading, making it accessible to almost anyone. And Jason's superpower lies in making difficult subjects like these easy to understand. And he's channeled this ability into creating the Brown Report and Power Trades University, where he offers courses and coaching to help individuals learn about investing and trading. And through that, he's empowered countless people worldwide to grow their trading accounts and achieve their financial goals. Jason, how you doing today, man?
Man, Derek, I'm excited. I'm happy to be here. We just came off having our 2-day live event here in Michigan, a 2-day live trader event. So I'm still on cloud nine for that and ready to hopefully open the eyes and minds of your viewers and give them another way to get the freedom that they're looking for.
Absolutely, man. I was just talking with you earlier before we hit the record button here that most of my audience is well tuned towards the real estate industry because that's what we talk about a lot. But this is going to be a super interesting conversation because I'm going to be learning right along with you all, because I want to learn more about options trading and basically hear a lot about Jason's story. So I'm super excited to get into this, man. Usually the first question we ask Jason is, which of the 3 degrees of freedom, location, time, and financial, do you most relate with now? And which one are you looking to line yourself up with more in the future?
So I would probably say the one I resonate with most now is time. And probably lie myself with more time in the future because I'm pretty location independent. And from a financial standpoint, we've been fortunate. And I know people use the word blessed. And it's funny, I had a conversation with our pastor about that because it's like if people don't have the finances, were they not blessed? And so I'm trying to steer away from that word. But we've been fortunate really to have what we want financially. So really the time piece, if we could just keep a hold of that one, that's the one I want to keep and continue to pursue and chase.
That makes a lot of sense, man. I think time is the common denominator that not all of us can very easily get more of, right? Like there's ways around it, but I totally get it with you, man. So that's amazing. Well, thanks for sharing that. All right. So
And
we
even
got
if
it.
you can,
Oh, go ahead.
oh, I'm sorry, I was gonna say, even if you can get more time in your day, we're all on like a ticking time clock till we kind of expire from this thing called Earth, you know. So like you really better enjoy it while you have it. So I hope most people put that above all the other ones.
Oh yeah, for sure. I think the time thing is definitely on that scale, the absolute scale, but then there's also the finite scale, day to day, week to week, right? You got to sleep a
Yeah.
little bit, you got to take care of your family, you got to do what you got to do to earn some income. Like all that time management, it really like adds up. And if you can do something now to maybe invest your energy and time into future time, right? You can set yourself up with systems, which is what we're going to talk about a little bit later on, man. I'm excited to learn more about that. But
Absolutely.
let's talk about your journey from this cell phone rep to being a successful trader. Since it's such an inspiring story, can you share a little bit about how that happened? I'm sure you've told this before, but I want to hear it from your own words.
Yeah, I've told it before, but I never get tired of telling it because it's my story, and I think it's a lot of people's story, and I don't think I'm that unique. I think what I birthed out of our situation is unique, but I don't think my story from where we come from is unique. And so we grew up pretty poor. I'm born and raised in Detroit, Michigan. I don't live in Detroit. I live in the suburbs now, but I'm still in Metro Detroit, Michigan. And when we grew up poor, I mean, we grew up. My dad passed when I was 2 from a car accident. So my mom grew up raised us as a single mother, not because my dad left or anything like that, but just he passed away in a car accident. And she had one income, two boys. My mom's from the South. They grew up and, picking cotton in the fields. I mean, talking the old school South. And they migrated up here back in the day when the factories, the Ford, the GM, the Chryslers, all that stuff was booming. And people migrated from the South to the North to get jobs. So my family was like part of that great migration. Like her uncle came first, and then he kind of sent for everybody else. His house was like the hub that everybody came and stayed at, and he worked for Ford Motor Company. And so when we grew up, we slept in sleeping bags. And I remember going to my best friend's house. I'm like, I don't know, maybe I'm 6 years old, seven, I'm not sure. But I remember going to his house and I was like, wow, you have a bed. And he kind of looked at me like, Yeah, I have a bed. Like, what are you talking about?" And I was like, I thought beds were for grown-ups because we slept in these California Raisin sleeping bags.
Yeah.
California Raisin, like a little band. And we slept in the sleeping bag. And so I thought when I get older, you get a bed because that's for grown-ups. But that's just how poor we was. Like we had love, we had food, we had shelter, but we didn't really have any money. And so because of that, I was always curious, like, oh, how come we don't have a bed? How do other people have money? So I thought, oh, it's because he has two parents. So they have two incomes. But then I watched my mom work two jobs and realized like that wasn't it. We still weren't getting ahead. And so I heard people talk about the stock market. And someone asked me this question recently, like, where did you hear about it at? And I'm like, and it's not that I heard it from somebody in my community, because nobody in my community was investing in the stock market. When I say I heard from the stock market, like I heard about it like watching Beverly Hills 90210, watching like, oh, he's a stock market kid, he's a trust fund baby. And I'm thinking like, okay, this is where people get their wealth, the stock market. You keep hearing about it through those means, but nobody was talking to us about it. And so at 18, I graduated from high school and we have our graduation. Somebody else, I'm like, man, were we really that poor and in a different class? Because somebody was like, is that a thing? I'm like, when we graduate from high school, it's like a celebration because like all the kids from my community don't make it out of high school. It was, so it's like they just glad you made it to 18. You're not in jail. You didn't kill nobody. And you didn't drop out of school, join the gang. And so in our community, graduating high school is like a big celebration. So we had the big celebration. I got about $2,000 of graduation money. And so I took my graduation money and I was like, okay, I want to be rich. They say I need to invest. So I go to a well known bank and I tell the lady, like, I want to open an investment account because I thought that's how you do it. You go to a bank.
Mhm.
And she was like, so what's your goal? I'm like, I want to be rich. Like, why else do people do this? And she was like, so you want aggressive funds? I'm like, yeah, I'm 18. I need aggressive growth. I want aggressive funds. And the reason I went to do this at 18, I give a little bit of background. I would hear things like, if you had invested $2,000 20 years ago, it would have grown to $1 million if you just would have put it in the stock market or bought this company. And so I was like, why don't everybody just take $2,000 when they're 18? And by the time they're 40, they're a millionaire. That's how little I knew about it. I thought, oh, most people just why wouldn't they just put 2 grand away? And it was like, oh, people don't have the patience to let it sit. I'm like, that's stupid. I'm gonna put the 2,000 in and just come back in 20 years and I'm rich. And so I put the 2,000 in. I come back at 20 and I'm like, how's my investments going? And it's down to $700. Now I literally almost had a heart attack, Derek, because I'm like, you just lost $1,300 of my money. I'm not about to graduate again anytime soon. So I don't know where I'm gonna get $2,000 from. Like that was my life savings. And like I got that from graduating and I'm not graduating again soon. So I'm like, I'm pissed. So I'm like, what happened? And the girl just kind of like, just sometimes stocks go down. And I literally tell her, I said, I could have lost my own money. I said, give me the 700. I said, how do I pull the $700 out? I'm going to do this myself. And so I don't know where I just was that cocky from as a little kid, but I just felt like if the professionals could lose money, I could have lost my own money. At least I would have known why I lost my money. And so when they gave me my 700 bucks, I spent $200 on some shoes, I think some Jordans or something like that. I'm working for Sprint PCS. I'm selling phones out of a Best Buy. I would go in. I'm the little guy at the kiosk, like, who's your cell phone provider? You ever thought about switching? That was me. And I'm like making $8 an hour, 64 bucks on a Saturday. I'm tired of working weekends. All my friends are out playing, having fun. Like I got to work all the weekend because I'm in college now. So I'm in there with kids who don't have to work and go to school, kids who parents help them out. And so that group of kids, I'm like, they get to have fun on the weekend. I'm like, I got to go to the job after class. I'm working nights and weekends. And so I'm like, man, if I could just make $50, because $8 an hour, 64 bucks, 8 hour shift on a Saturday, they take taxes out. I take home 50 bucks. So I'm like, if I could just make $50 once a week, I won't have to work Saturdays. And so I'm like, I got 500 bucks. Sprint stock was $5 a share. I think like most people, we like, I'll invest in the company we work for. And so I'm like, I can get 100 shares. And in my head, I'm thinking, I just needed to move 50 cents. I'm not even asking for it to move that much. Just 50 cents. Is that too much to ask for? And so I was like, no, I can move 50 cents. So I buy 100 shares at 5. And almost immediately after I buy it, stock starts falling down to $4. I'm like, you
Yeah.
got to be kidding me. I'm like, you gotta be joking. Because before I invested, I'm watching it, it's hovering around 5. The moment I buy, it's like 490, 475. Next day, 460. Next day, 425. I'm like, you gotta be kidding me. Right. So it goes down to $4. And I'm like, is this like, okay. So I hear people say, you gotta be patient, you gotta wait for the long term. I'm like, true. All right, let's not panic. Goes back up to 5. I'm like, okay, here we go. Just needed to go to 550, make my 50 bucks. I'm rich, or at least I'm on my way to not working Saturdays. Stock falls down to $4 again. So now I'm pissed. I'm like, the market's rigged. It's a scam. That's why they got my social security number and my IP address. They know exactly what price I bought it at and won't let it go any higher. At least that's what I thought. So then the stock goes back up to 5. And I was like, I've seen this before. I was like, I'm going to get out at 5, which was break even. It fell down to 4. I got back in. It went up to 5. I made my first $100. So that's 2 Saturdays I don't have to work. I was like, oh my gosh, it worked. And so I didn't know at the time that was called a channeling stock. That's a pattern. It's channeling between 5 and 4, 4 to 5, 5 and 4, 4 to 5. It's a channeling stock. You draw it on a piece of paper, it looks like a snake almost like in the grass. And so I start studying I'm like, I get really good at playing that pattern. And then I started making like $100 a week, like on a regular or bi-weekly. So it's like $200 a month because it took like a week to go up, a week to go down. I was making like $200 in a month or 100 every other week. And so I started getting really good at like flipping my 500 bucks. So I was like, what other patterns exist out there that I don't know about? So I started studying these other patterns and realized that there's these patterns that show up in these charts that tell you the ideal time to buy and the ideal time to sell. And I like to say ideal because it's not 100%. Sometimes people hear that and they're like, so you mean to tell me it tells you exactly when to get out and get out? It's like, not exactly, but you have a good idea where the market or people or investors don't like it at that price. And you have a really good idea where they do like it. And so I got really good at seeing that on the chart. And so I was like, man, if I had more money, I could make more. And so I was like, where am I going to get more money from? And I had a scholarship to Wayne State University's Mike Ehrlich School of Business here in Detroit, Michigan. And I saw my friends getting like student loan refunds. And I had a scholarship, an academic scholarship. So I was like, I wonder if I apply for the student loan refund, will I get the refund? So I went to the financial aid office, like, I got a scholarship. Do they apply the scholarship first? And what happens if I apply for the loan? And they confirmed what I thought. And so, like, well, they'll double pay the account. You can use that money for room and board or anything else and living expenses. I'm like, well, I live at home. So I'm like, boom, I'll get the refund. So I applied for the student loan, got the $10,000 refund because I knew I was going to put it in the stock market.
Mhm.
So I grew it to about 113 to $120,000 as a 21-year-old college student. And so that literally like launched my trajectory into stock trading.
Amazing, man. Thank you for telling that story. First of all, there's a lot of gold in there. The first thing that I see that's kind of this common thread among your entire story, which I see in a lot of successful people, is the tenacity, the challenges that come up, right? Even from an early age, right? You didn't take that challenge and look at it as like, oh man, what am I going to do? Like, and then just kind of shrug your shoulders and then move on and complain about it. You're asking questions, right? And you're figuring out, hey, how can I make this work? And when all these things got frustrating, you still kept going. And that's the key to success, man. So I love that. That's the common thread that I noticed among all of it. But I'm sure that you must have gotten lots of attention when you started trading stocks and, you make six figures and you're not even graduated from school, right? Were
Oh
you
yeah, there's a whole nother side to the
Yeah,
story too.
I was gonna say, I mean, I'm not sure if you were telling people about this or like people were catching on to what you were doing, but what was that like, being a college kid, not having to like now the shoe was on the other foot, right? Like you were now one of those kids that like didn't have to go in on weekends and stuff soon. How did that end up working out for you?
Oh man, it was super powerful. And that's where kind of part two of the story goes is like I dropped out of school. So I said I made $100,000 not working. Like, why would I continue going to school?
Yeah.
Not to mention here in Michigan, like the big thing is to become an engineer. And so I had saw people graduating with their engineering degree and not getting jobs. And so I was like going into my junior year at this point. So I'm like, I still got to complete junior and then senior year. I'm like, that's 2 more years of engineers graduating. And there's University of Michigan State, Kettering, all these other engineering schools. And I was like, that's gonna be a bunch of us looking for jobs. So like, I'm out. I'm like, I made all this money from the stock market. I now know what I want to do. I want to be a full-time investor. And so I drop out of school. And to your question of like, did I tell people how was that? It was like, come on, young black kid from Detroit made $100,000 not working. You
Uh-oh.
know, I bought a new car. I bought a Lexus GS 300, put it on 20-inch rims, moved out to a nice little apartment in the suburbs. So it showed. My cousin who was trading with me, he bought the new Escalade. And so, we bought cars. We put them on big rims, just young kids, just like finally able to achieve some of those dreams and goals without selling drugs. So we were just partying really every day, dating, women or girls, young ladies at that time, just splurging, having fun, Cartier glasses, whooping it up, right? Not paying any taxes, right? Got some bold tax advice. And so, yeah, people noticed that we were making money,
Yeah.
but it didn't last. The party did not last. So I'm making about $100,000 in the stock market 3 years in a row. I go into year three with about $250,000 in my trading account. And I'm like, I'm gonna buy a condo downtown Royal Oak at this condo place called the Fifth high rise unit. And I was like, I'm gonna buy a condo in Royal Oak, Michigan. I'm gonna pay cash for it. They like $500,000. I risk $250,000 trying to make $500,000 because if I pay for $500,000, I still have $250,000 left to trade in my account because you always need money to trade because that's your money maker. And so I risk $250,000 trying to make $500,000 and I lose it all. So by 24, I'm like flat broke. I had to sell my Lexus, sell all my belongings in my apartment, and I had to move back home to Detroit with bars on the window, drug infested neighborhood, gangs, people trying to steal the little car that you do have. It was a super humbling experience.
Man, crazy. And then from there, how did you rebuild? I mean, obviously you had these skills, right? So you had a way to approach it from a different perspective now that you have some, some life skills, right? Let's call it that. You got some experience.
Yeah,
How did you
absolutely.
rebuild from there?
So the funniest thing happened, Derek, is that, I was into personal development and personal growth. And I would listen to people like Jim Rohn, Brian Tracy. They would say, take a picture, write things down, journal, take a picture because it won't always be like this. Do a vision board of where you want to be, focus on that. And so I had this wild idea that I was like, man, all right. And there was another, I think it was Brian Tracy who was like, what would your hero do? Like, how do you become like your hero? Like, you might not have the energy to do it yourself, but think how would your hero act? You might not have the knowledge, but what would your hero do? And so at that time, my hero was Warren Buffett. And so I'm like, okay, I know Warren Buffett then lost $250,000 before. I said, but if he quits, he never becomes Warren Buffett. So I'm like, if I quit, I never become Jason Brown, like my version of Warren Buffett. And so I had this crazy idea. I was like, anybody can make the money, but how many people can lose it and make it back? And so I was like, I'm going to record myself making the money back. And so I actually started my YouTube channel recording myself making the money back and the lessons from losing money in the stock market. And as I started to make the money back, people were like, man, how did you find those trades? How did you know this? And if you see my shirt, it says like, you never go broke taking a profit. That saying came because when that trade, I was trying to make a 500,000, I was up 100,000. And I was like, no, it's not enough. I want 500,000. And so I didn't take it and I went broke. And so from that, I was like, you never go broke taking the profit. Like, and so I just recorded myself making the money back, the lessons I learned from losing it. And people started like asking me like, how'd you pick those trades? Can you teach me? And I was like, up until this point in life, I realized how to get like up to $250,000 in the account. I was like, man, how do you get $1,000,000 in the account? And so I started losing a little bit of money again. And then I took my first course actually at this time. And then I bought like another subscription and I got as good as the teachers because I was like starting to second guess myself. So like, do I really know what I know or was I just lucky? And so I took a course and then I bought a subscription and I became as good as the teachers. I was picking the trades before they even did their recorded session. And so I was like, I wonder if people would pay me. And even when I was listening to them, I was like, why don't they explain it like this? How come they don't explain it like regular people can understand it? And so I was like, I wonder if I could explain it to where regular people would understand, would they pay me? And I was like, maybe that's my idea to get $1,000,000 in the account. Cause up until then, I would take like my W-2 money. I worked commission sales. I lived off my hourly and I was taking my commission to invest to get back into the stock market. But I was like, that'll take me forever to get $1,000,000. And I was like, maybe this is my $1,000,000 idea. And so that's what led me into teaching and selling courses, is because I was documenting my journey and making the money back on YouTube. And people were asking, can you teach me? Can you coach me? And so that's the reason why we have two different brands. So the Brown Report, that was me reporting on like making my money back. Like that was the Brown Report. I was just documenting losing this money and making it back. And then Power Trades University started because people was like, well, what's your style of trading? And I was like, well, I put a lot of power behind it by using either options or I buy a lot of shares. And so that's how Power Trades University was born. So really the Brown Report was just me teaching how I made it back. And then Power Trades University was me teaching other people. And that's kind of how the two brands were formed.
Amazing. What a great story, man. We have so much to dig into here and not a lot of time, but I want to make sure that we get some of the juicy meat right here. So your power trading method that you were talking about, right? Do you mind breaking down some of the key principles of what that is for our listeners and for me and from a selfish point of view?
Yeah, so power trading is the concept of, because I was day trading back then, but I was sitting in front of a computer every single day. And I realized when I look back on my trading account, it wasn't the trades that I took every single day. It was like 3 or 4 or 5 trades that really made the biggest difference in my account. And so I said, what if I just wait for those ripe opportunities and then put a lot of power behind it, put a lot of money behind it, or use options so that I don't have to put a lot of money, but I'm controlling a lot of shares with options. And so that's the concept of power trading. It's just like knowing the option strategies that you can make money whether stock is going up or down, and then you're waiting for those most ideal high probability low risk times to put a lot of power behind it, and I'll make 100 200,000, and then I might not trade again for 2 months, it might be 3 months, because all those little trades where I'm making 1,000 losing 2,000, I realized if I could just sit out on the sidelines and just watch and wait and be patient, kind of like a sniper, and just put a lot of power behind it, that would give me the freedom, because then I'm not sitting in front of the computer all day. I'm only watching a handful of stocks. I'm waiting for the most high probable setup. And then I put a lot of power behind it and then I just wait again. And so we call it power charts, power trades, power profit, because you're looking for one of the powerful chart patterns, like sprint going from 5 to 4, 5 to 4. That's one of the power chart patterns. And then power charts, power trades, you place a power trade by buying a lot of shares or by using the options. And then we take a power profit, 50% returns, 100% returns, but we can't do that every day. If you think you're going to come get those type of returns every day, you're crazy. So it's about taking a powerful return and then you sit out and you wait for the opportunity again, but you go into the next trade with 100,000 or 50,000. I know sometimes people can't relate to those amounts of money, but maybe they got $10,000 and they make 5,000. Well, if you can go into the next trade with 15,000, but 5,000 of it is the market's money, you're a little bit more comfortable. You got a $5,000 cushion on the next trade to take. So you go in with a bit of powerful mindset and more of a power stance versus I can't lose this money. And if this goes wrong, I'm out of commission. You're like, I got a $5,000 cushion. And if I waited for the right opportunity, it should play out. And even if it doesn't, maybe I only lose 2 of the 5,000 of their money. And so that's what's called live to trade another day. And we got all these other sayings that we teach, because it's not about being right every time. It's about being right big and about being wrong small, because you will be wrong sometimes in the stock market. But
Yeah.
if you lose 1,000, lose 1,000, lose 1,000, but make 6,000, that's kind of our principle and philosophy. You want to be wrong small, you want to be right big, and want to be right more often. But the only way to be right more often is actually to trade less, because it's less, you're unlikely to be right every single day when I was day trading. So people think like, you must sit in front of a computer and trade all day. It's like, no, not really. That's a recipe for disaster, because the chances that you'll consistently be right is very slim. But if you're waiting and you're patient, you wait for the right setups, it's a high probability chance you'll be right if you're waiting for those high probability setups.
Yeah. That's cool stuff. I think some of the folks that I've been following, like some of these hedge funds experts like Ray Dalio and some of these people, right, that are talking at a high level, and even Dave Ramsey, right, like some of these guys, like they like stock investing, but their approach is to diversify and wait. Now, I'm sure you've heard this before. I'm curious what your thought is on that, and I think I know where it's going, but my thought is that by taking this approach, it's just slow, right? Like it's pretty much the same as if you're working a W-2 or something. Diversification of risk will definitely get you wealthy over time. At least I think so. I mean, we were talking about that story when you were, 18 years old with that $2,000 check. So you never know. I'm not sure if that was a mutual fund or whatever it is that you ended up buying.
It was a
But
mutual fund.
yeah, of course it was. Those fees, man, not good. But yeah, no. So, but if you buy like a whole basket of things or just buy the index, right? That's what all the professionals say. And my thought is that maybe that's just one size fits all type of thing for people who don't know the stock market well and just want to get involved. What would you say to folks like that who all they know is the, diversification method?
Yeah, so people have to, I think it's super important to understand who you're getting your advice from. And so
Good point.
when you think about the Dave Ramseys and the Ray Dalios of the world, and this is no disrespect to anybody when I say this, but I think people need to understand the truth. Dave Ramsey is primarily talking to poor people. And so you can't go tell poor people that you can be a millionaire, you can do it in a short period of time. You know, typically poor people, and when I say poor, it doesn't mean that they're poor, they're not good husbands, good fathers, good church members. These are people that he's telling to pay cash and stick it in an envelope and cut up the credit card. So you have poor financial habits. Now, a rich person, I'm thinking, why the heck would I pay cash when I can run up all these credit card points and they give me $5 to $10,000 every year
Mhm.
free
Yeah.
just by swiping the card, and I just turn around and pay it off immediately if I can't control myself. But he's talking to people who can't control themselves, who don't even have any. Google Sheets are free, can't even take few minutes and put in Google Sheets how much is in your bank account and how much you have to spend. So you're talking to people with poor financial habits. Don't even try to get rich. It's too complicated for you. Just put it in a mutual fund, diversify, stick your cash in an envelope, because you're not responsible enough to swipe a card and turn around and pay it off. You're not even responsible enough to know that you shouldn't buy 3 pairs of gym shoes that you can't afford. Like,
Yeah.
so that's a different class of people he's speaking to. Now, I bet you if Dave Ramsey goes into a meeting with his hedge fund buddies or other people, he's not giving that same advice. But to General America isn't rich, and General America doesn't know how to manage their money. So that's the blanket advice they give. But when you start to look into it, you're like, that's not how to get rich. Most people got rich by focusing and becoming good at something and taking calculated risks that had huge upside. Not to be confused with gambling, not can be confused with being reckless, but they focused on a particular skill or asset class and learned it really well, to where when those opportunities came, their only method was not just buy a bunch of it and hope we're right. It was like, no, I've been studying gold. I've been studying Forex. I've been studying the S&P 500. I've been studying Google or Microsoft. I've been studying AI. And they were focused and they made their money by, you look at Warren Buffett. You talk about diversification. This guy would be like, we just bought 30 billion in Apple stock. That don't
Yeah,
sound too
or Coke,
diversified to me. It's
Coca-Cola.
like these
Yeah,
guys are focused on asset classes and they know them really well and they're willing to put a boatload of money behind them. Obviously, they buy companies too, but him coming out here like, I just bought the Fidelity 203 mutual fund and put 40 billion in it. It's like, nah, we just bought $30 billion stake in Apple, right?
yeah.
That is what the rich do. They know certain asset class, they know where the growth is coming from, and they know the strategies to minimize risk and the profit from it.
Mm. How do you advise people in taking what that risk is? So let's say, if because I'm 100% with you, and it also translates into the real estate world as well. If you're not a real estate an expert, or you're willing to put time and energy into it to make mistakes and learn it the hard way under smaller stakes, right? Then it's probably not the right idea for you to take all of your life savings or all of your home's equity and try to buy a different property with it, right? To like rent it out. That's probably a poor decision if you don't
No,
have the
most
knowledge.
people advice is what? Buy your primary home and it'll
Yeah,
go up in value over
right,
time.
right.
And that's the investment advice they give the general population. You don't tell them about wholesaling, fixing and
Right.
flipping,
Yeah,
triple net
house hacking.
leases, land contract. Like you just like, no, they won't even understand that stuff.
Yeah. And you have to go there. That's just the way it is. So let me ask you, when it comes to taking risks, right? And you're talking with your students or maybe with people that come to you asking for advice, there's a risk threshold, right? Like, how do you advise people on saying, hey, how much risk should I take? Because, look, I've got a seed of 50K, but that's all my savings. Um, how much should people risk when they're starting? I know it's like the answer changes as people get more experience, but like, how do you encourage people to think about that?
So people have to understand finances in general. And so let me use myself as an example. When I lost all my money and I moved back home, I lived off my hourly salary and I took my commission and I invested it back in the stock market. But you got to understand there's a little bit of gold wisdom in there. The reason I did that, I moved back home because it cut my overhead costs. My mom was already paying for her house. I didn't cost that much in electricity because I was working all the time or in school. And so I was able to, my commission checks would be 2,000, sometimes $5,000 a month. By me living off the hourly, every month I had $2,000 to $5,000 that I could risk, and my life wouldn't change that much if I lost the money. I mean, I'd sell some more cell phones and I'd make 2,000 to 5,000 again, and I could take that calculated risk again next month. And so the answer is in your lifestyle. It's like you have to put yourself in a position where I can take a 5,000 or 2,000 or 1,000. Maybe you're in a position where you can only take $100 risk. You have to reduce your overhead to where you can take some calculated risk and it won't devastate your lifestyle or your family. Like for me, I'm like, you said like 50,000 is all they had. Well, for me, I'm like, if I blow 50,000, just give me about 10 months because I was making $2,000 to $5,000 in commission. I was like, I'll have 20 to 50,000 again in anywhere between, 10 to 20 months again. And so everything comes down to a math equation. Can you create margin in your life so you can take calculated risk? That's number one. Number two, you have to understand risk. And people act like the stock market is the only place where they get amnesia. And they're like, what do you mean, Jason Brown? I'm like, well, let me ask you this. It's New Year's Eve. Would you give the keys to a 16-year-old kid and let them go out at about 1:30 a.m.? I'm like, no. I'm like, why not? That's because the clubs let out at 2 o'clock, drunk drivers, biggest drunk day of the year. That's super risky. I'm like, okay, so you understand how to calculate risk. You understand what makes a situation risky. When you come over to the stock market, I say if you took that same $50,000 and you bought all of Amazon, what's the chances that you're going to lose all your money? Well, what has to happen for you to lose all your money? Amazon has to go to zero. What is the chances that the biggest AWS, Amazon web server that supplies that's where Facebook and all these companies host their data because they got to host the data somewhere. All these companies do business. What's the chance that they go out of business? Number two, everybody's paying 149 a year for Prime and getting 2-day delivery. What's the chances we go cancel our Prime and go back to saying we don't want 2-day delivery, right? So the chances of them going to zero is very slim. So once you start understanding what has to happen for you to lose your entire $50,000, you start to realize the chances of that happening is slim to none. Then you could take it a step further and say, what if I bought the XLK? Well, what is the XLK? It's the ETF, the technology ETF of the S&P 500. Well, what's in the XLK? Microsoft, Apple,
Mhm.
Amazon, Facebook. I could keep going. So now if you put that 50,000 into the XLK, the entire tech sector would have to go to zero for you to lose your whole $50,000. So people got to so as far as advice go, the first thing I tell them is like, you got to get educated on risk and understand what is the definition of risk when it comes to investing. How can I lose all my money? Because
Mhm.
if you can understand how you can lose all your money, then you can understand what not to do. Don't go buy GameStop, AMC, a marijuana stock that you heard about on some, random forum. That's risky. But buying S&P 500, Fortune 100 companies and looking at the chart of the best time to buy and sell them, you start reducing risk. Why? Because they S&P 500. So you got to be vetted to even get into the S&P 500. That's number one. Number two, you're
Yeah.
buying a good company. Number three, if you buy the entire sector not going to zero. Now you add reading charts and understanding options on top of that, you drastically reduce the risk. You'll never bring the risk down to zero, but you drastically reduce it by not driving on New Year's Eve. Now, what's the equivalent of that in the stock market? Every quarter they announce earnings. They can miss their earnings. The CEO could say something crazy. That's just like driving on New Year's Eve. You could get hit by a drunk driver. So I personally don't trade over earnings. So
Smart.
once people get educated, which is why I preach education, people be like, well, I could learn all this on YouTube. It's like, not really, right? You can get entertained on YouTube, but if you really want to learn it, you don't go to your doctor who's like, I learned how to operate on YouTube, right?
Yeah.
Maybe they got the inspiration to go to med school from YouTube, but you wouldn't go to a doctor who 100% learned on YouTube. And so I really preach education. If people could get educated, then they would know the difference between what's risky, what's not, and they wouldn't be afraid to utilize that $50,000. So that's really the conversation I have with them. And then one other question I ask people, because I don't like to give advice, I like to coach and give people the right direction. I'm not a licensed financial advisor, but I also like to ask them, what's more important to you? Because people will be like, I'm trying to flip my account. And I'm like, you realize in trying to flip your account, you can also lose your entire account. So then they're like, well, maybe I don't want to flip it.
Yeah.
So I'm like, okay, do you want continuous growth? Even if that means you don't flip your account, but you got consistent growth. And so it's also getting to the root of what people really want. Because they're like, I want 100% returns. It's like, you got to be willing to take 100% losses. Okay, you're not willing to do that? Okay, let's
Yeah.
bring your goals in alignment with what really has to happen. And the other side of this too, Derek, is it's nothing wrong with wanting 100% profit. Are you willing to put in the effort it takes? Are you willing to look through the stocks, look through the charts, and put in the effort it takes to make 100%? And
Yeah.
most of the time, that's a no for most people. And so I try to make sure their goals and their effort and reality are all in alignment before I ever start thinking about giving advice or coaching people.
That's great, man. I love that. There's so many gold nuggets from that in this as well. You listeners got to go back and I'm definitely going to be listening to this again just because it's advice like for investing in general, man. Like there's a spectrum of risk and reward, right? And human beings are just
Absolutely.
not good at understanding risk. They just aren't because people are they think that they're different than the norm, right? And they just don't process risk, especially if you're dangling high returns in front of them, right? That's just the way that it works right now. Okay, I got to ask you one last question before we head into the rapid round, because as an expert in trading, I know this is a crazy time right now. Lots of different things are happening. We got war, we have politics coming, we got quarterly earnings, we have interest rates high, we've got jobs weakening, all these things going on that we see as real estate investors as macroeconomic risks. What without, you're not a licensed advisor, so I'm just asking for your opinion on what you're seeing. What changes or trends do you think are going to be really big in the horizon in the financial world that all of our listeners, whether they're stock traders or real estate investors or just people who are trying to make a living, what do you think they should be aware of?
So they say history doesn't repeat itself, but it often rhymes. And
Uh-huh.
so when you look at everything that's going on right now, you know, I've never lived through a world war, but I could tell you if there was ever one that looked like it was shaping up, I mean, think about it. You got Russia and Ukraine that gets into, this war. You have the Americas back in Ukraine, but you got China back in Russia, so to speak, right? It looks like countries starting to come together and form alliances. Then you have Israel and Palestine. Some people call it a terrorist attack, then it's a war or a war that started because of the terrorist attack. I want to make sure I'm giving those people respect from both areas of whatever
Yeah.
they call it, but it's happening. And now you have the US, like we support Israel. And now like who's going to come to Palestine? So now again, now we're split between two potential wars, which starts to leave us vulnerable, right? And so I'm not saying World War III is going to happen, but it's sure shaping up to where we're starting to pick too many sides and alliances are starting to form on each side of the fight. And that could cause a world war. That's just something to think about. When it comes to interest rates, you got to think, if you couldn't afford something, I just put it on my credit card. It's to the point now where you're like, I don't know that I want to carry that interest 30 days
Yeah.
because the interest rates are high. So
Yeah.
now the people who don't have it also have to be leery that they can't even use what's normally their emergency fund, which is their credit card. You have people who have a home don't want to leave their home because they don't want to enroll into the new interest rates. Anybody that has a car doesn't want to buy a new car because they don't want to get it at the new interest rate. And so all of that is not a recipe for we go higher from here. Then you think
Yeah.
about the UAW, last time I checked, the auto industry was a big industry, not just in Detroit, but America. And so now you got these guys going on strike. So if they strike, then they laying off people from other plants. Last time I checked, they do not get back pay when they go on strike or a layoff. So even if they get what they want, the longer this goes on, you got a group of people that's going to have to claw out of debt that doesn't have the money to pay their bills, may lose their house, may default on. I got an email from my credit union and they just sent it out to everybody. I'm not involved with the auto industry, but the first thing it said was financial relief for the auto workers. And it was like, we're going to give you a 30-day grace period. And I'm like, it's already happening. They
Yeah.
already making concessions for these folks. And so they can't make concessions for too long for this group of people. They're like, look, we got to take your house, or look, you got interest, penalties, late fees. So it's just, these are all things we need to be aware of. Now, here's the good news. The economy needs to reset. And so with that reset comes opportunity for those who have good credit, for those who have what's called cash on the sidelines for a rainy day. There will be opportunity to pick up properties, pick up stocks, pick up a lot of things at a reasonable rate. And if you're looking for some good news, long term, I don't care if it's World War One, World War II, somebody flying a plane into a building in 9/11, pandemic, we typically emerge from it 1 to 2 years later in a better situation. So I don't want people sitting at home depressed. If you can get through for another year or two, it normally turns around and the economy goes higher. And so what do you do in the meantime? I think you get the knowledge, you get the information of how to capitalize and take advantage of the situation when it comes. And if you're a stock trader like me, for example, the other day we had puts on the S&P 500. So when the S&P 500 tanked, we made money. And so there's a group of people that when things collapse, we actually make money from the
Yep.
collapse.
Mm-hmm.
And it's not because we're bad people or evil people or rich people. We just have knowledge that other people don't have or aren't willing to go and get.
I love it, man.
So
It all comes back
sometimes
down.
these are the best times.
It all comes back down to that education. And you're right, man. The opportunities emerge from these types of situations, and you just have to keep your head about you and be prepped. So I love it.
Absolutely.
Cool, dude. Well, this has been an amazing podcast. I still have the rapid round, which is 5 questions
Let's do it.
meant to be answered in 30 seconds or less each. So let's see if we can hit it, man. Number 1, name any resource that was or is essential in your journey to pursuing your freedom.
I would say one resource was the book Think and Grow Rich, and the other one was Rich Dad Poor Dad. Those were very instrumental, like in my early stages. Just some of the principles of how they thought about money and the mindset that they have. So those are two resources that were instrumental then and still instrumental now.
Amazing. This question I normally ask every one of my guests, and I don't know what they're going to say, but I think I know what you're going to say to this one because it may be, it's going to be pretty much right up your alley. But number two, if you woke up and your business was gone and you had $500, a laptop, a place to live, and some food, what would you do first?
I would start shooting YouTube videos and documenting
Amazing.
like even if it wasn't the stock market, whatever side hustle I started, I would document it and start teaching people. I would be like the crash test dummy for whatever side hustle. I'd start driving Uber. I'd tape myself. I'd post my earnings and I would show how I'm making money to get back into the stock market. So 500, a laptop and some food. I would just pick a side hustle and start recording myself making money to get back into the stock market.
Beautiful.
Because then while you're recording on YouTube, you also get YouTube advertisers
Yep,
revenue. So you also can
that's
start
right.
making money from that.
Love it, man. Definitely. Number three, what does your self-reflection and goal setting practices look like?
So I journal. I got like a drawer full of journals to self-reflect on. So I try to journal. I would be lying if I said I do it every day, but I try to journal a month, once a month, every other month, because when I look back on times in my life when I lost money, I thought that was the end of the world. And I'm looking back like that was such a small piece or part of my life that I'll read back through there. I'm like, life is over. What am I gonna do? And now I'm like, man, you was tripping back then. So my form of reflection is journaling. But I'll take it a step further. My most modern form of reflection is recording videos. If you look at my YouTube channel, when I make money, I'll have my daughter in the video. Whenever we paid off our house, we videotaped that. And when I made like 100,000 in a day, I video recorded that. So I also like to keep video journals because I just know one day we'll leave here and I think it'll be able to inspire people after I'm gone. But also, like my dad passed when I was 2, and I was like, I don't really know what his voice sounds like. I don't know what his mannerism. How did he have his hands? How did he do his shoulders? Like we didn't have cameras back then, and when we did, we couldn't afford it in our community. So I'm just big on recording everything so that even my kids someday can be like, that's how my dad looked when he had hair before it was all gray, you know? So
Amazing. That's great. Whole nother perspective there. All right. This is number four. What are the core work habits that you attribute mostly to your success? Like just personality traits that you attribute?
I'd have to say number one is belief, man. Like I believe, my wife believed, we believe when we shouldn't have believed. You know, like we believe when you probably look like that kid ain't gonna amount to nothing. And it's like, but I just believe because I think if you don't believe, then you won't even try.
Mm,
And so number one, I think, is belief. And then number two is be curious. I am so curious. I was curious when I was little, like, why don't we have a bed? I was curious, like, how do these people
yeah,
get in the stock market? I was curious how they lost $1,300. I was curious if I can make it back and record myself doing it. Like, I'm just super curious. So, like, when people say something is risky, I'm usually like, hey, how does it work? Like, why'd they say it was risky? You know, like, I'm just super curious. So being educated, getting the knowledge, belief, and then being curious.
amazing. Great stuff, man. Last question I have for you today. What tool or process has become one of your most important time, money, or energy saving ninja magic tricks that you use every day?
Shoot, I probably say our project management system. we,
Yeah.
we, but let me make it even simpler than that because most people might be like, I don't have a business, I don't use a project management system, but we do use that every day. It saves us time. But I would say video is the number one tool that we use every single day. And the reason I say video is because even in our systems within our business, we record a video of us doing something so that we don't have to teach the new person or ever say it again. I record courses so that I don't have to say the same thing over and over to my members. So I would say video is the number one tool. Like this podcast, I don't know if you post a video version of
Yep.
it, but
Mhm.
people will be able to come and watch the video for months, years to come. And so I like video because it serves me well into the future, whether it's from training my team, whether it's from training other people, whether it's from a podcast like this that'll live on to help other viewers, I will always make time for video, for using video. In fact, if people record a podcast and they don't have video on, I get irritated because I'm like, well, I'm gonna record on my end because I might use that
Wow.
video
Yeah, yeah, for
somewhere
sure.
else. Like,
Yeah, the other thing is that like you can use video to regenerate content. Like this podcast can
yes,
turn into an
so
article, it can
many,
turn into, a whole bunch of different things. And that's what's
so
really
many
cool about it.
reels and
Yeah,
stuff like that.
for sure, man, for sure.
So
Anyway,
video.
Jason, this has been an absolute pleasure. And I wish that we had some more time to keep talking. But before we let you go, why don't you tell the audience, or at least our audience, a little bit more about how they can find you and, learn more about your programs?
Yeah, so people always ask, "Can you teach me? How can I get started?" And they assume that they need a bunch of money or something like that, but they don't. We put together two free resources. One is called a stock market starter pack. And so that one is for people who are like, how do I open an account? What are those three most common patterns you talked about? When is the best time to buy or sell? We got the stock market starter pack. And then we have the stock option starter pack, which is like, how do I control stock versus owning stock? How can I get those 50, 100% returns? How can I make money from stocks falling with those put options you talked about? We have the stock option starter pack, and those both can be found at thebrownreport.com, just right there on the homepage. And then our YouTube, Instagram, everything is right there at thebrownreport.com. I'm the Brown Report on all social platforms as well. So thebrownreport.com is the best way to get the free education. And then if you want the paid education, you can look into that as well.
Amazing. Jason, thank you so much. And for those who are listening, we're going to have a link to all of those resources that Jason provided us and mentioned here in the show inside the show notes on the podcast episode page on our website. So wherever you're listening or watching this episode, please give us a thumbs up, a like, subscribe, interact with us in any way that we can so that we can appease those algorithm gods and get more and more people like you to listen, and then also get incredible people more like Jason on our show to share some incredible wisdom with us. So audience, just wanted to thank you for listening to this point in the podcast. And Jason, thank you, sir, for coming on the show. It was an absolute pleasure.
Derek, thanks for having me, man. It's been fun.
Same here. We'll see you guys next week. Take care.